They are gambling on the outcome of each individual hand. But since they have the law of probabilities working in their favor, what that means is that over a large series of events, they will always come out net winners. So in essence, they're not gambling. We can do the same thing as traders. Exact same thing. We have an edge. Our edge gives us a higher probability of one thing happening over another over a series of trades. But each individual trade, the outcome is not known nor knowable. All I have to do is execute that edge flawlessly every time, and I will come out a net winner. And in essence, over a series of trades, I'm not gambling. On each individual trade, I am. Are you guys with me on this? I'll explain it in more detail later on. There is nothing you can do to take away the risk. Burn that in your brain. There's nothing you can do to take away the risk. Any effort that you put towards taking away the risk is going to assure you of failing. To whatever degree you're going to try to take away the risk of being wrong, the risk of losing money, the risk of leaving money on the table, the risk of missing out, all these four fears will detract from your ability to create a consistently rising equity curve and cause you to make mistakes. Okay, go ahead. Who had a question back there? Go ahead. Well, I don't know how you define a good poker player. I'd have to know how you define I don't know how you define a good poker player, so it'd be hard for me to answer that question. What's that? Well, yeah. See, winning one night, or and getting on a winning streak is different than someone who can gamble and make a consistent income. People who can make consistent income gambling, work basically off the same kind of mindset. And they also there's a lot of other variables involved. It's like people who are immersed in gambling. I mean, there's a lot of dynamics in play that are not so much different from a psychological perspective. But for an example, and I don't gamble. I mean, I don't play blackjack anymore or anything else like that. But anyway, it's like if I were, what I would do, the first thing I would do is I'd walk through a casino and I'd try to find a dealer who's having a bad night. In other words, a dealer who's busting on a consistent basis. Or if I was playing craps, I would peruse the table until I found somebody who was hot with the dice. Because I do believe in streaks. I believe in winning and losing streaks. And if you can, and if I'm playing my cards right, if I got a basic strategy on how I'm going to play my cards, or how I'm going to bet at craps, what I'm going to want to do is I'm going to want to, find somebody who's already on a streak or looks like they're going to be on a streak. In what way? If we flip the coin 1,000 times in a row, okay, we would come up with a pattern, a discernible pattern where there would be very little difference between heads and tails if the coin is evenly weighted, right? This is a pattern that would come up over and over and over again. You could actually bet on it. You could actually bet on the fact that if I flip the coin enough times, like 1,000 flips, that the relationship between heads and tails would be within 1%, right? Let's see, but within that 1,000 flip sequence, can you have winning? You could have heads. Can heads come up 10 times in a row? Yes. Yeah. Okay. I didn't say it was predictive. What I'm saying is I'm just looking for people. I'm looking for situations where it's likely that this is what's. If someone's on a winning streak, they're on a winning streak. I don't know how long it's going to last. Or why. I don't care. I'm just looking for edges. That's all I'm saying. So to answer his question about gambling, it's not a good correlation because there's too many other factors involved. So, but otherwise, I'm just looking for that kind of edge. Go ahead. Yeah, I will now, but the whole rest of the time is going to be pretty much elaborating on it. When I say be comfortable, you say be comfortable. I say that you accept the risk at such a core level of your trading personality, of your trading belief system, that there is no other part of your mental environment that would argue for anything different. In other words, what I mean is that when you've accepted that I can put this trade on, I do not know what the outcome is going to be. I don't care what the outcome is going to be because I've adopted a series of trades perspective, meaning that I don't know. Basically, what am I expecting? I'm expecting wins and losses over a series of trades. And I don't know the sequence of wins and losses. But I do know that my edge in the past has produced, let's say, a 60% win-loss ratio or a 70% win-loss ratio. Again, I don't know what the sequence to wins and losses are. And I don't care. I just need to execute properly. And when I get to the point where I really have accepted these principles, accepted them at the very core of my being, I will be able to do this without fear. I'm going to show you how to do it tomorrow. But what I'm saying is that this is where we're getting to. We're getting to the point where if you're going to do this right, you gotta transcend your fears. And to transcend your fears, you're going to have to learn how to think differently. It's that simple. If you're not willing to learn how to think differently, you might as well walk out of the room now. It's not going to happen for you. It really isn't. Go ahead. And there's enough back case of people who have been in this business for years, who have lost one or more fortunes, until they get to the point where they come to the realization that, you know what, my life strategies don't work in this business. Why do you think there's this theme in all really good traders, this theme that most of them had lost one or more fortunes before they finally broke through the threshold of being able to create consistent results? Because that's what it took. It took losing all that money to break down the resistance of their dysfunctional beliefs about the nature of this business or their erroneous assumptions about what this is about. And most of those erroneous assumptions have to do with analysis. Which is normal, because when you think about the way we define analysis in our normal everyday life, if I step into and engage in an analytical process, and I really believe that process has validity, then when I come to a conclusion, I should think that I'm going to get the outcome I expect. Wrong in trading. That's not the case. You don't open up a trading account at a brokerage firm and they tell you that, you know what, whatever you think, the way you define analysis doesn't work here, does not work. You're only using analysis to get an edge. And an edge is a higher probability of one thing happening over another. And if there's no way to assure myself that this trade I'm going to get into is a winner, I'm guessing. And if I'm guessing, I'm gambling. They tell you that? Anybody ever tell you that?
John?
Yeah. Okay, John. John's a good guy. Okay, I'm sorry. Yeah.
So, go ahead and involved in contract something because of the pace of all the thing, reducing the risk. That's part of the strategy. You're not eliminating risk.
No, you're not. No. You're never eliminating the risk.
Right.
You're accepting it. You're never eliminating it. There's nothing, just you have to get to the point where you're just, like I said, there's no question in your mind that the risk always exists. Now, when you say eliminating the risk by scaling out but see, there's a difference between what you say is reducing risk from a money management perspective and actually accepting the risk. When you reduce risk from a money management perspective, it's because the market's telling you, one, that's your strategy, okay, and two, the market's saying this is a good place to take some profits. That has nothing to do, I mean, you can say, the vernacular is, you can say, yes, I'm reducing risk. But that's not what I'm talking about. I'm talking about from a psychological perspective, actually accepting the risk. Okay? So there's a difference. But these are subtle differences. And these are the kind of thing that gets us in trouble. See, when we don't understand these subtleties, we can get into a lot of trouble. Go ahead. Do I what? No. No, I don't really know what the squeeze is. So I haven't been trading in a long time. As a matter of fact, I turned my trading. I use TradeStation. I turned my trading platform off really just about 3 years ago, right around this time, thinking that, you know what, I don't want to be distracted with the market. I'm going to be done in 3 months. And I'm still not done. And I haven't turned it back on. So I don't even watch the markets right now, anyway. Yeah, as a matter of just to tell you what, maybe I shouldn't say. I don't know. I'm gonna say it anyway. I'll give you an example of what I'm talking about. Where I'm at right now in the book is the last chapter, and I'm actually writing about subjective discretionary trading. It's taken me like 26, 27 days just to get the first 3 paragraphs. What's the name? I know you're going to ask. I've got about 20 names. When I'm done, I'll pick one. Okay? When the name comes, I write it down, and if I can find the file, because I haven't thought of the name in a long time. I'm going to have to find the file, because it's like thousands of files. But anyway, yeah, it's like, and when I say I've worked, it's not like I haven't been writing. I've got pages and pages and pages. It's just that the words have to come together in just the right way for people to really get it. And it's not, it's not till it resonates, you know, it resonates with me that, yeah, okay, I've got the sequence of the words just right. And like I said, the 25, 26 days just to get 3 paragraphs. And if you had asked me a month ago, I'd have said, hey, I'm almost done with it. I'll be done in a few days. And what really scares me is the next part is intuitive. Now, I've already got a lot of the stuff on intuitive written, so all I got to do is find it. But then again, no, seriously, I'm not kidding, because I've written it years ago. So, I'm going to have to find what I've written. I'll find it. I mean, it's not like it's lost, but, I don't want to get into it. Anyway, so where are we? Yeah, right. No, exactly. It's it's my own problems with the whole writing process that creates all the difficulty when you get right down to it. I never, because I didn't grow up to be with the aspiration of being a writer. Do you really, or an author, or have any idea what that was like? Or here I'm almost finished my 3rd book. Spent most of my adult life writing books, and I'm like, it's like I just wanted to be a professional hockey player. I said, I'm not kidding you. I'm really not. Because I grew up in the 60s or the 50s, because I'm 66 years old, so it's like I grew up in the 50s, and back then there were only 6 NHL teams, and there weren't any American players, any American hockey players in the NHL. There wasn't not one American hockey player in the NHL. So my chance of becoming a professional hockey player was 0. But all I'm saying is that my aspirations were to be a professional hockey player. That's what, and to be a writer, it's like, come on. I used to, this honestly got true. When the term, I went to Michigan State, and the term would start, and I go into a class, and the professor said, we're going to have a term paper. I'm out. Go my advisor, drop the class. Writing, forget it. I avoided writing at all costs. Now I know why. My life purpose was to be devoted as a writer, and I was just avoiding what I was going to end up doing. I didn't. Why start it back? Why start it when I'm in my late teens and early 20s? I'm going to end up spending my whole life doing it. But anyway, go ahead. You know what? These are all personal, individual variables, and it could be anything. I mean, just even, is John here? John. Okay, we were talking last night, in the cocktail thing, and John brought up that he made a connection. You want the connection about being a hero?
So it was interesting last night. We were talking, and as I was going through this kind of, it's always a lot of fun doing, the disasters of your life. And
really? Yeah, when you're on the other side of it. Yeah, when you're on the other side of it, yeah.
And as I was talking about it, it was like, it was a pretty good time where, consistently taking like early 20s, like taking like $10,000 and running it up to like 100 to 130. And I've talked about this before, right? In one smart way, right? You get to like 130, I would take $30,000 and go buy some real estate. And then the logical explanation in my mind was, well, I was able to take 10 and turn it into 100, so now I'm going to take 100 and turn it into $1 million. See? I mean, so think logical. And the first time I did that, like 6 weeks later, I was back to 10. I don't really know what happened. And then it's like, okay, so I, shook it off. About a year and a half later, I was back up to like 120, 130. Again, I did one smart thing, took that down back to 100, took that money for real estate, the down payment was 100 twice, and stuff like that. And then I'm like, all right, so obviously the market helped me at other times. So now, I took it from 10 to 100, and now, I was working and going to school. And, okay, so now I'm going to go from 100 to a million. And in my mind, this million was like a big thing. It's like, well, that's financial freedom, that's, I can quit my job, that's all I do. 6 weeks later, I'm like, it's like, man,
the market's got you here, right? And so we go along, the third time was the worst, was the, at this point it was like a good-sized trading account, about $130,000, $140,000. I was pulling weekly income out of it, had a job, I was making like $50,000 a year, I was ready to quit. My wife and I had moved up at the time, because we moved up to Minnesota in January with the job transfer. It was 34-0, and she said, look, you're breaking all this. We don't have food. It's the car will park outside. But we don't get a garage, a house. And I was like, okay. So I found a house, $30,000 down payment, and I had to figure out my trading account to do it. And I really had this in my mind that I was kind of like, I really like my trading account balance, and I don't want to use it by $30,000. So I'd like to do a couple of different trades. Make $30,000. And then when I pulled that thing out, my trading account balance did the same. And so that was kind of the same like you said. And so I did that, and it was like, this trade I had etched in my mind because I bought 100 Forex puts at like $8, so $80,000. And it was like in 1995, nice downtrend in the markets there. And then, at one point, the premium dropped, and toward the end of the day, and it came down to like $30. So I was like, wow, I had might been at 8, I wasn't at 7. So we had to put the rest of the account to 7. And remember, I was only trying to make $30,000, and then it closed. I was up like 7 or 8 thousand. Like, wow, you can get looking up that morning, or food up there. So the next morning, I wake up, I turn on CNBC, for a single apartment, and there was a green arrow, and it's at 136 Dow points. Oh, so, naturally I turned off the TV and should go to the world. Honestly, that's not a live shot, I think it's a live shot. And really back on down, 136 points. I'm like, okay. Now at this point, I've been trading long enough to know, like, okay, so this obviously was trading.